And Zig, let me put it this way. If I were running the company, I would want to get revenue growth. You're experiential. You own this whole category, particularly in a period where people are leaving their job and they have their choices, and most CEOs have no idea how to deal with it other than to call you in. So what's the tension between going just full bore and maybe even getting to $2 billion in revs but having to lose a lot of money, or just saying, okay, listen, now because this market is the way it is, I guess we got to start slowing our expectations in order to make profits for shareholders?
Well, look, Jim, as you pointed out, this is an outstanding quarter that we came off of. And I think I'll call out the fact that this is the fourth consecutive quarter of robust growth. And in fact, in Q4, our subscription revenue is up 61% year over year. And so, look, at the end of the day, we see a robust market. We're managing for growth, but we're also managing it with discipline. I mean, if you look at 2021, we had non-GAAP operating margin positive result that we have, and we're actually guiding to $1.4 billion in revenue this next year, and we're also going to be operating margin profitable. So that's the way that we're managing it, and we're the leader in this market, as you pointed out.
See, I think one of the problems is someone who ran a subscription business, people don't understand subscription accounting. In reality, if you wanted to, if we were allowed to just book it as rev, because it would be earnings, because these people aren't canceling. But you don't. What is the true metric that can tell our viewers why this stock actually is very cheap? Because as a subscription guy, I know it is cheap.
Well, as you know very well, it's a very important metric.
Oh, go ahead, Zig, first, and then I'll let Ryan take a shot at it. Go ahead, Zig.
There's a really important metric, which is your net recurring revenue growth, our NRR, 128% this last quarter, right? And that's actually a sign of the fact that companies are expanding and they're building on our platform. There's CEOs that are actually taking their entire company and they're saying, let's standardize on this platform, because we want to be able to use this to be able to get a 360 understanding of our customers. We want to get connected to our employees, and we want to be able to make much better decisions in the way that we run our business. And so that's a really important metric, 128%. That's a record metric, and it actually, I think, illustrates the core health of this business.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.